Good morning, Bay Area. This is John Payne, the host of Real Estate Radio Bay Area, coming October the 23rd on Fox News Radio, 9010 AM from 12 to 1. And this is the RateWatch Now and Daily Update Report. Here is a snapshot of the mortgage-backed securities market yesterday. You know, the FOMC really didn't help this much at all. We had an okay bond market auction go off yesterday on the 3-year treasuries, and just with the FOMC's comment, you know, a lot of people think they didn't say anything to hurt us, but they didn't really say anything to help either. Is we have to do something, but we're not quite sure what it is, and that, in my opinion, has sent to market in a sell-off. What's going to make rates go up today? You know, have export prices. This is not really a market mover, but when you are in such a bearish stance that we have been in the last couple of days, anything can move the market. We also have supply concerns today. Again, a negative tone on the FOMC's comments, which a lot of people don't think they were negative. I tend to think they were negative because they didn't say anything. And then on top of all of that, you have a 10-year auction that's going on today, or a 7-year auction, excuse me, that's going on today. It leads to concerns. And then again, the FOMC notes, I'm not going to sit here and proclaim that I read all 9 pages of it, but when I read just the highlights, you know, they talked about possibly spilling more money into buying bonds. Got to do something. Really, they said the exact same thing. And we needed a little bit something more in the bond market to really sustain the rally that we have been seeing the last couple of days. What's going to make rates go down? I have nothing. Here is what the market has been doing thus far. It started out this morning doing pretty much what it was doing yesterday, and then it popped back up. I'm not sure if this is going to sustain throughout the day. I think we're going to end more of a roller coaster ride, but quite frankly, I hope we do. By the way, I'm tracking the 3.5% bonds now, and I'll get more into that in a minute. You can see what the lenders are doing as far as pricing. I have 17 that's pricing for the worst by 31 basis points. I am tracking the 3.5% coupon. I was tracking the 4%, but the 3.5 when we tends to be closer to par, and par would be at 100. So it's just a choice. It's a dealer's choice, and I'm choosing to track the 3.5. But you can see we had this huge gap down opening this morning. You can see how we started out here, and all of a sudden here comes the FOMC. Well, the bond auction started, and then the FOMC came down, and then we had a nice little gap down opening as well. This par 80 is going to be a huge support level that we're watching. If we do not hold this par 80, we can essentially come all the way down to this par 40. But we just have to kind of just wait and see how investors are going to really look at what is going on today. And if we have a good auction today, we could hold this. If not, I think we're going to fall right through this level. If I go back and look at the 4%, you can kind of see where we were, because this is what I've been tracking for the last couple of weeks. So I'm kind of letting you see that we actually came down below. We were up here above this ceiling. Now we're back into the range. So you know, from a 4% standpoint, it doesn't look as bad, but we are below the trend line. And it looks like gravity may have a hold of us and pull us down. If this level at 2.8 doesn't hold, we're going to go all the way down to 2.6, 2.7. So we can see a tremendous fall here. And, you know, think about it. We're at the 103s right now. So a nice little drop, nice little sell-off if something doesn't come back and hold. In summary, the FOMC, as far as I'm concerned, was useless. The information they gave yesterday, and it totally killed the market momentum that was going on. On top of the sell, it's on top of the bond sell-off, we have the 10-year auction that's taking place today. And it will take an extremely low CPI and PPI number to pull us back up to where we were. Again, the par 80 is a very important support level. If we do not hold that, we could possibly see a 100 basis points drop. That's all I have for you today, Bay Area. Make it a great day. Make sure you start to tune in on October 23rd. I will be hosting the Real Estate Radio Bay Area on 9:10 a.m., which is the Fox News Radio, from noon to 1 on Saturday. Until tomorrow, Bay Area, make it a great day. If you know of anyone that could benefit from my morning updates, please pay it forward.